The Bank of Canada just announced another major rate cut, bringing the overnight rate down to 3.25%. This is big news for the Canadian economy and, more importantly, anybody looking to buy, sell, or invest in real estate. Let's break it down. Rate cuts reflect shifts in economies, both globally and locally here at home in Canada. But how does that impact your financial decisions, and what should you be doing about it? Stick around and I'll walk you through it. The Canadian economy has shown mixed signals. Consumer spending and housing activity are on the rise, but business investments and exports are pulling GDP growth down. With inflation hovering around 2% and uncertainties like US tariffs and changing immigration policies, people are starting to think that this could shake things up. Also, unemployment has crept up to 6.8%, and wage growth is still high compared to productivity. For real estate, these numbers signal some easing in labor-driven inflationary pressures, but also hint challenging long-term growth. As someone who helps clients navigate the ever-changing market on a daily basis, I have seen how these shifts create both opportunities and risks. For example, past rate cuts have spurred housing activity, but they've also led to more competitive bidding environments. For a long time, sellers thought prices would catch up to where they were in 2022. That ship has long sailed, and people are getting sharp on their price points. Houses that have been listed for a very long time are looking at where do they need to be to get in range to actually get the showings, albeit even get the offers. And new products coming to market are pricing 10 or 20% under asking price and generating multiple offers. As we're doing consultation on pricing, marketing, and negotiation strategy, we are making sure that we are giving them all the data and the best advice that we can, whether it be price or time that's most important to them. Now, on the buyer side of things, we're in the same boat. It's so funny to me when you see a property underlisted and everybody wants to fight over it. When a buyer calls me and they're looking for a great option, a lot of times I'm looking at expired listings. I'm looking at stuff that's been on the market for a year, and I'm picking up the phone and I'm calling those agents. You would be shocked at what some of those agents are telling me. I don't know if they're talking to their clients, but I know they'd be willing to take a lot less money. And guess what? My offer is probably going to come in under that. As a selling agent, I'm getting lowball offers. And guess what? I'm working with my clients and I am fighting for every penny. It's very important that you do the same. Now, what does this mean for you? For buyers, lower rate means your buying power increases. But remember, it's the same thing for the other buyers in the marketplace. So you may see increased activity. It would be smart to get dialed in on your strategy today. For sellers, this could be a great time to list your property, especially with consumer spending on the rise, but be careful to not think that this is a pivot and the market is coming back right away. Make sure you're getting good advice, not somebody just buying your listing by telling you some crazy price because they have nothing else going on and just want to get a sign on your lawn. Make sure they're giving you the right advice or it could hurt you long-term. For investors, with wage growth remaining strong and housing activity picking up, now might be a great time to secure properties that align with long-term economic trends. Find out where the development is happening and maybe try to skate to where the puck is going like Wayne Gretzky always did. In terms of strategies, here's 3 very simple ones. 1, find leverage. Work with knowledgeable people who understand the broader economic changes that affect your local market. I'm talking lenders, I'm talking lawyers, I'm talking real estate agents. Number 2, monitor core inflation and policy announcements to stay ahead of future rate changes. The fact that you're watching this video is a great sign. 3, diversify your portfolio if you're investing. Focus on markets showing strong consumer activity and stable growth. And if you're in those situations and you're looking to do a strategy conversation, feel free to connect with us directly. Our team loves nothing more than to talk about real estate high level. We definitely have some insights as to what's happening in Southwestern Ontario. And if you're investing or buying or selling anywhere in North America or the globe even, let us know. We have prime partners in every single market. Last but not least, join our community for investor reports, local insights, and exclusive events designed to help you thrive in any market conditions. We just hosted the most recent Prime Mastermind series. It was unbelievable. We had close to 100 people at a $3 million estate. We hosted 2 live podcasts. If you want to see those replays, they're on my channel. If you want access to any of those communities, just jump in the comments and let us know, and I'll make sure we connect with you. But what do you think about the latest interest rate announcement? Do you think it was the right play? Also, jump in the comments and let me know.